Welcome, people. This is Kimar from Kimar Can Help. Today's video, right? Today's video is going to be like a introduction. What do I mean? You want to learn how to trade? Let's start, right? First thing I'll do is look up, what kind of trading platform is there out there, right? You got Cash App, you got Fidelity, you got TradingView, you got MetaTrader. You got a lot of different trading platforms out here, right? Um, the one I use is TradingView. So type in TradingView, look for it, boom. I didn't even type that in right. Up here it say TradingView, but down here it's saying Trade Station. So let's look for TradingView, boom. Okay, let it pull up. Okay. I already created an account, so you'd have to come up here, create an account. If you see me looking up, it's because I'm looking at my TV screen where I got this set up and stuff. So I'll go up there, go up here, create an account. I have I have the paid version, but you could use the free version and stuff like that, and basically create an account. Once you create an account, um, you could go down to this thing at the bottom. So once you create your account and get on the screen, right? I'm trying to kind of fast forward. So once you create an account on TradingView, it says right up here, TradingView. Once you create an account on TradingView, okay, now you want to figure out, okay, what's next? Okay, you could start by down here. I already have it highlighted. This is a broker, but you could basically close out of this broker and log in with your own broker. But I recommend you guys to start with paper trading. Okay, start with paper trading. You can log out of paper trading, and then you see all these other brokers right here that you could utilize from. But I recommend I recommend the one I wanna start using paper trading. Don't be like me and many other people where I say, yeah, man, I lost my money, blah, blah, blah. You understand? Start with paper trading. Learn how to use the system when you say you want to use. Stop using your real money card, then y'all get real pissed. And then you're not gonna really want to do it, right? So start with paper money, right? Start with paper money. If you just learn the basics. So you go by there, you click on it, like I tell you, register, whatnot. Register, right? Boom. So now you're connected with the paper money. You're connected with the paper money, right? No, you ask me. All right, so no me there right there, so my lord. What's next? What's next? All right, what's next? No, me can tell you. Say you can use this thing right there, so this is called a trading platform, and look at different trading um entities. That's not the right word I wanted to use, but I couldn't think of the commodities, stuff like that, like different commodities, right? Like gold, oil. Okay, so you got stocks, you got funds, you got futures, you got forex, you got crypto, you got indices, you got bonds, you got economy, you got options. You got all these vehicles that you could trade. Me personally, I trade forex, so I'm clicking on forex, and then right here you only see one pair because I in the search bar right here. In the search bar right here, it said Euro USD. Okay, that's the European dollar versus the American dollar. All right, so if I close that out, then it's going to show all of them. Okay, it's going to show all of them. Um, source. These are different brokers. I'm assuming that you could associate it with. Me, I like Awanda, so say I want to go. Euro USD, right? Or the Great British Pound. I might do Great British Pound or Wanda because, like I said, I'm using those. Currently, I have a real account with these guys. So let's click on a Wanda, right? Right. Boom. What's next, Kimon? I'm here. You know what I'm saying? I'm following you. You know, I got this. All right. What's next? You want to know how to trade. You first and foremost, these things are called candlesticks. What is candlesticks, Kimara? Okay, let's go find out, right? Google. All right, it's funny for the Google Gemini, but Google, right? Man, it went straight to Google Gemini. Hmm. I just want regular Google, right? What is candlesticks? I put it together. Okay. Um, so candlestick trading is a method of analyzing price movements. So those little lines that you see, those red and blue things that you see on the charts, those are price movements, okay? Green typically is the buyers and red typically is the sellers, but you could change those colors. You could pick whatever color you want to be the buyers and you could pick whatever color you want to be the sellers, okay? Um, so read that. I'm not going to bore the rest of the audience, but read that, find out what is a candlestick, okay? Let's get back to it. This is the candlesticks, right? Um, in order for me to start making sense of this, I need to do a top-down analysis. Top-down analysis. What is this man talking about? Okay, let's go type it in, right? Because anything that I'm telling you, I have the receipts. I could go pull it up. I could go show you guys, okay? So top-down analysis. And I'm doing this out of the love of my heart because I really want to educate myself. I know I'm going to educate myself in the process. But I also want to educate my people who say, "Man, I want to learn how to trade." All right, you want to learn how to trade? Come on, let's learn. All right. So top down. uh, Hopefully, I don't jack up my spelling while I'm showing you guys. But hey, this is this is not scripted, right? This is just me showing you some stuff. All right. Top down analysis in trade. Let's get it. All right. You could look at Copilot. Copilot went and dig up the information for you guys. So another thing, what I'm trying to show you guys is, yo, we got technology, man. If you ever see this little symbol on your phone, or on your laptop or tablet, like, yo, use it. You don't gotta drive to the library no more and try to, or try to find a website. Man, we in an informational era. Okay, information is being poured down our throat more than we could handle. So use information to get smart. Okay, I'm not gonna preach. But I tell my kids all the time, if you got a smartphone or a smart device, you need to be getting smart with it. All right. So let's stop all them little games on the phone, laptop, and let's get smart. Top-down analysis. Everything that I say is something, right? So top-down analysis is a trading strategy. I can't you say that pronounce that word because I'm an accent. I'm not Jamaican. I just can't spell or read, right? But anyway, strategy, right? That involves examining the market from a broader perspective. Starting with the higher time frame. You hear what they say? Starting with the higher time frame to identify an overall trend. When they say trend, they're talking about direction. Is it trending up? Is it trending down? Okay, so when they say trend, they're talking about the direction. And gradually narrowing down to a lower time frame for precise entry point. So that is what a top-down analysis is. So let's go back to our chart. So now you're here with me, right? Now you need to figure out and start making sense of all this noise. So now we got to do a top-down analysis. And also, again, like I said, do your own independent research. Find out what is the candlesticks and all that stuff, and really educate yourself. Educate yourself about the market. Um, Trading, been around for how long, right? Great question. Look at that. This is before computers, or I don't know if they had computers and suppressed it in the dark age and re-brought it back out. You know what I mean? But listen, this was before computers that we know. You know, and it goes back even further than that when it comes to trading. But I'm just saying, trading has been around since at least, what I'm saying, the 1300s. All right, at least. But we could do some deeper dive. We could do some scholarly sources and see how far back trading really came from. Okay, so information is right at our fingertips. We just got to start using it, right? So trading been around for a while. Educate yourself on it. All right, top-down analysis. Let's start with the month. Oh, these things up here. 1 minute, 2 minute, 3 minutes, so on, so on. The month. Okay. Each candle that print, if I click on the month, let's refresh. This button down here is the refresh button. Each one of these candles, because I clicked on the month, each one of these candles took 1 month to completely close. Okay, from the start, from the open to the close. This is a month, and the same thing goes for if I click on the weekly. If I click on the weekly up here, all these candles took a week to close. Okay, it took a week to close. Let's pick a pair that ain't marked up, or let's clear all of this, right? So I just right click, remove drawings, and it's gone. Poof, gone. All right. So all these candles take a week to fully completely print. And for the past 2 weeks, 3 weeks, market been trending what? The market been trending down. From what I was always told, you trade in the direction of the trend. You trade in the direction of the trend. So basically, the market was making for years now, right? Or since back in March, the market been trending up. It pulled down. It came back up, failed to take this high out, and that's whenever the market failed to take something out, look at it for what it is. Okay, the market failed to take out this high, so goodly possibility that the market is looking to go down. And what happened? The market went down. The market took out this low, meaning, hey, I could take that low out, I could take some more. Okay, so now it took out this low. Whenever the market breaks something, it normally gives you a pullback. Okay, so it gives you a pullback. And right now, what pattern can you see? My audience, my people out there, what pattern can you see? Or this is the last high basically the market has made, and it's saying right up here in this corner, that's the last high that they made. Market have not got back up to that high. Instead, what the market is doing is trending. It created a lower low right here. So if this pullback from the last high that it made, if this pullback right here, stop right here, what happened was the market broke below that. And once the market broke below that, it started to retrace. So I told you, once the market breaks something, it started to pull back, it started to retrace, right? So now we basically building our narrative. What is going on in the market? Do we think the market is going to go down, or do we think the market is going to push up? Okay. Again, this is a high time frame. These take weeks. This is 3 weeks in the making, so you can imagine how long this take, right? So we know on a high time frame, the market is pushed in down because it's failing to make higher highs, but it's creating lower lows. This low is lower than this low. So the market is creating lower lows. This high is lower than this high. So this is a lower high because this high is lower than that high. Okay. And this high is even lower than that high. So conclusion look like it's trending down. Let's keep going. Now we on the daily time frame. Each one of these candles close. It take 1 day for one of these candles to close. 1 day. 1 day. All right. So now we have some biases, right? We say, man, I'm favoring sellers because the market is showing me that it want to go down for sellers. So let's keep pushing. Let's keep pushing. All right. So what can we see on the daily chart, right? What can we see on the daily chart? We looking for me personally, I like to look for um I like to look for my key areas. And my key areas, I use two indicators. You can find these indicators right up here. It say indicators, metrics, and can't pronounce those strategies. You know what I'm saying? I can't pronounce my accent. So I embarrass myself. All right. But in here, I got all my favorite indicators, you know. But it's only two that I'm using so far that I really seem to like. And the first one is called the imbalance detector. Okay. And imbalance, what is imbalance? Like I said, man, anything that I'm telling you, it is something to it. All right. So the imbalance, hold on, it ain't typing. Imbalance detector, right? We're gonna find that. Imbalance. And listen, I can speak proper English and I can talk patois. All right. So if you hear me, I'll do it in and out, is I really want to keep my roots, but I also want to pronounce the words them as clearly as possible so you can understand. All right. Because no people jump to reggae music and not even know the words to it. But story for another day. All right. Imbalance in trading, right? All right. ChatGPT went and digged up information for you. Here it is. All right. I'm gonna use that. I'm gonna replace that word and put your plan. I'm gonna change that word and say plan. All right. So imbalance trading is a plan that capitalize on discrepancies between buy and sell orders. So people don't understand how you can buy or sell something. How you can sell something where you never have, right? But in the market, you can buy or sell against the market. Okay, you could say, man, I think this market is going down, and I just showed you guys, right? That hey, the market going down, but take your time, read this information, okay, and go from there. But it's a discrepancy between buyers and sellers, all right? And over here, they got an image. Let me see if I could pull up that image for you guys. So over here, so this is a balanced market, right? So you got to learn about candlesticks. That's why I first showed it to you. Do your research. So when I'm talking, this ain't weird to you, right? So this is a candlestick. These are wicks. That long line, those are the wicks, right? If it's a green candle, that means the market opened here, push down here, pull back up all the way up here, and this was its high, and then it closed right here. So basically, this is a candlestick. The wick, once where this candle close at, is where the next candle opens. Okay, the candle pushed down a little bit, pushed back up, creating that wick. Then it went all the way up here, made it to the top up here, and the sellers pushed it back down, and price closed right here. Okay. If you notice, all these candles are connected. Okay. So that's a balanced market. If you look over here now, the market opens down here, close up here, right? It made its high right there. But when the next market opened, it went, it did its thing, came up here. but this is where the imbalance come at. From the previous candle high, right, which is that line right there, to where the third candle came back. It never came all the way back to test this area. So when when this candle broke this high, the price didn't come back and test. And anything that the market breaks, it likes to come back and test. Perfect example. The market broke this low, right? This was a low. The market broke this low because it pushed up from there and was trending up, right? The market finally came back and the market broke that low. Okay. So whenever the market breaks something, expect a retrace and a retest. So that's basically what was missing right here. A retrace back to this area to test this area. So therefore, this is an imbalance. All right. Hopefully that makes sense. Okay, moving on. Okay. So I use an imbalance detector to find imbalances because the market loves those. All right. So, and then I use another indicator called smart money concept. So look these two from the same people too, from the same creators, okay? So smart money concept and imbalance detector. So I just discussed imbalance detector. And if you notice, let's zoom in on it so you can see it clearly. So you see this blue line? Let me unclick this thing. It's gonna go away once I unclick it. So these blue lines and that shaded box basically identifying from this red candle when it made its high, price then it never came back and tested, and it also created an imbalance. And this indicator that I told you that I like identify the imbalances. Okay, so what I normally do, I look for imbalances that has not been touched. So to find key areas in the market, you use that indicator that I told you about, and you identify key areas. You could even label that thing. So I have some pre-templates right there labeled. So I'm looking for imbalance, IB's imbalances, right? And DZ's demand zone. Um, so I could put what timeline is this? This is the daily. Do I have a daily imbalance? If I don't, I'm just gonna click a regular imbalance. Okay, so boom, I just identify a key area. So I know the market might possibly, most likely, come to this area right here. Okay, so this is a key area for me for this week to take my profit, or just know the market might react from here. If this is a If this is a downtrend or an uptrend, the market might react from here. Okay, let's look for some other imbalances. Okay, let's look for some other imbalances. This one, it looked like it hasn't been touched. Okay, I could click on this. These are my favorites. All my favorite little toolbox, my toolbars that I use. These are my favorites. I could click on that, or I could just copy. I could hold. I could click control and I could drag my mouse and I will make a copy of that line. Okay. So now I have two potential areas that the market may come and attack. Simple as that. Okay. And let's go lower. Matter of fact, let's change this and put daily because we know it's the daily imbalance. We want to kind of differentiate. Probably said that word wrong too. All right. We're gonna identify these two things. All right. So I'm just teaching y'all what I know, man. Like, you know what I mean? That's what I'm doing. Kimara can't help. All right. Kimara can't help. I'm doing it in a way where watch me. No gatekeeping over here. Okay. No gatekeeping over here. So so now we have some potential areas the market might go to. And that's on the downside. Let's see the upside. Okay, on the upside, I see one right here. So and this is still on the daily. So let me capture this, copy this like I just showed you, and put up here. So now I know, okay, on the upside, if the market push, trying to find my mouse, you guys. So if the market push up, right, the market goodly react from right here. Hey, let's watch this thing for the rest of this week, and let's see what I'm saying, if what I'm saying makes sense. All right. So, and I'm have full confidence in this. All right. So far, on the daily, the market still looking like it's trending down, creating lower lows, right? Now we need to figure out how can we get in, Kimara. That's what I want to know. How can we get in? Me personally, I would try to get in up here by this imbalance because I told you the market like to react from these imbalances. So if you want to get in for a sell, right? If you want to get in for a sell, I will wait till the price push up in here, right? And activate my sell. No, no, I'm sorry. Wait till it get up in here, right? And then get to your lower time frame and you start looking for your entry. Might have to be for another video, but let's see if we could get through this. Okay. So now I'm zooming down. Now I'm on the 4 hour. So all these candles that's print is on the 4 hour. And so far, it's still looking like a downtrend to me, in my opinion. Would you all agree? Um, so let me show you something, right? So the market was struggling right up in this area right here, this box right here. Put a box around it right here. The market was moving sideways around this area right here, right? Let's just extend, right? The market was moving sideways up in this area. It wasn't making higher highs and higher lows like I just showed you on a higher time frame. It was actually moving sideways. When the market moving sideways, is looking to reverse. Okay, it's looking to reverse. So the market broke out of the accumulation, letting you know, hey, I want to go down. Pause, right? I want to trend lower, right? The market want to trend lower, right? So the market broke out of that box. Market came back into the box. Market came back out the box. When you start seeing the market not really moving or trending or doing something, it's creating a pattern. What is a pattern? Okay, we could go look that word up. Because anything Matillion, right? We can find it, right? So if you look in the alphabet, A, B, C, D, E, F, G, H, I, J, K, L, M, N, P, right? What letter do you see? All right. So I know y'all see it, right? So W pattern in trading, right? Let's look that up. Oh, I'm on images. Let's get off images. Or so you see that? Everything that I'm telling you is I have the receipts for it, man. I don't just say these things, all right? What is a W stock pattern? All right? A W stock pattern contains four main price point, blah blah blah. Okay, so do your research. I don't want to bore the audience that already know this stuff with this stuff. All right, but do your research. You know what I'm saying? It's also called a double top. So if you hear people say, "Oh, double top, double bottom," like they're not just talking fancy. These are real terminology that's used in trading. All right. So read up on it, learn about it. Educate yourself. Education is the key, but you cannot open that door unless you apply it. So apply the knowledge, man. You already got the technology. You got the smart device. Get smart with it. All right. So these are W's. These are W's and these are M's. So those are two patterns that you're starting to look for. So let's get back to the chart. We're looking for patterns now. You know what I'm saying? What kind of patterns are we seeing? Let me tell you about the W's and let me tell you about the M's. and you could go look it up yourself. W's, when you see, look at the W right here too. W go up. A W go up, right? And an M, let's see if we can find an M, a good one. A M goes down, you know what I'm saying? I gotta find a decent one. So this is an M. I don't know if y'all could see the pattern. This is an M. We call these M's and W's, right? Um, Let me draw it up for you if you can't see it, you know, an M, you know. And then price came back, test the neckline, respect the neckline, and then wham, it dropped. Okay, it dropped. So price respect that neckline right there, right? Respecting the M, and price dropped. And this key area right here, you could have set this as your take profit, and you'd have made your money. You know what I'm saying? Simple little things. You know what I'm saying? M go down. You got that money. Girls do what? Hey, children outside. Um, you know, the W, go up, Well, never fix my mindset. I apologize. But W's and M's, all right? W's and M's. So we see a W, and this look like a failed W. It is a failed W, right? Because the W was supposed to do what? It was supposed to go up. It was supposed to respect this neckline right here, but instead it didn't respect this neckline, and it basically violated all day long, right? Indicating that, yo, what you told me about this higher time frame stuff, that the market is looking to go down, is true, right? It's true, right? Because if this was the last low, this wick right here, this big old rejection, this rejection is the buyers pushing up price. So this was the first indicating that the buyer is trying to make a push, right? So you got this rejection, which created this long wick, right? They call those doji candles. You see that candle like a little grave standing up, right? It's a doji candle, and it's a specific kind of doji too. You just have to do some research, okay? What is this man talking about doji candles? And you talking French. All right. Doji candles. All right. Doji candles. Anything I'm telling them, again, I keep on saying, anything I'm telling them, they have the receipt fee. All right. All right, doji candles in trading is a candlestick pattern that forms when the opening and close price of a security. So that's what they call those different things, right? Securities, whether it's gold, whether it's indices, bond, forex, blah, blah, different securities are virtually equal, indicating that the market indecision. It is typically has a very small body and a large upper and lower shadow. All right, these are the wicks, basically they talking. All right, so read up on that. I'm not gonna bore them. All right, there's some images over here. I'm showing some images of different types of doji candle. All right, so these are the different types of doji candle. So when you hear me say doji, boom, doji. All right, so when you see a doji candle, okay, find out what's going on. All right, so this is buying pressure. All right, because the market pushed all the way down and buyers did what? Pushed it all the way back up. They came back and created a higher low. This low is high. This low is lower than this low. So it's creating a higher low than this one. And then market push high and even break higher. All right, forming your doubly. So you just have to start learning how to analyze the chart and make sense of all this craziness, right? Just educate yourself. That's all it takes. Some simple education, right? Um, and I'm trying to figure out what this blue line is right over here. This one right here. Let me go back on the 100 time frame and see if we could identify it. I don't remember putting that one day, people, so I'm gonna delete it. All right. I remember putting these two daily. I don't remember putting this one, so I'm gonna delete it for now. All right. So far, what we looking at, what you could see, what I'm seeing is what you seeing, right? When market tried to break above, market came back and take them out. All right, that's on a higher time frame, indicating that we looking to sell. All right, we just want to sell. We just want to sell in the right place at the right time. Okay, so I think this area was key. All right, a lot of orders got stuck up in here. A lot of orders got stuck up in here. So like I said, wait till the market take these people out. Wait till the market take these people out. Don't jump for your sale, man. Don't jump for your sale. When you rush into things too early, you get caught up, okay? So just take your time. Wait. Have some patience. All right. So like I said, imbalance is up here. I will wait till price take out all of these people's stop losses. So these people who said, man, I'm going for a sale up here and I'm gonna put my stop loss up here because I know it's going for a sale. I see it clear as day. Okay, you're right. But have some patience, right? Because what the market gonna take out all these boys up here. I used to have some money symbols, man. I used to have some money symbols I put up here. I'll have to find it, but um that don't stop nothing, right? But like I said, wait till price get up here, take out these boys, and then take your sell. Because you will have a better risk to reward to take your sell from here all the way down here. Look at the numbers, look at the coordinates to the side, and operate, all right? Operation pullback. I am no gatekeeper. I'm just trying to teach people how to make money and learn at the same time, okay? All right. So I'm on the 4 hour, and it looked like I could do some adjustments, right? There's some imbalances right here. So I could adjust these daily imbalances and I could adjust them and probably even change the label, right? This is an imbalance right here. Or let's undo. Um, let's duplicate it and we're gonna change the color. How that sound? We're gonna change the color and we're gonna change this to 4 hour and we're gonna change the right end to blue. All right, boom. So these are the 4 hour imbalances. This is the daily, um, because it's high. This one right here, this one already got touched. So once your imbalance got touched and price react from it, you see how price react from that imbalance? So when price went up, right? That's why I tell you, you don't chase money down. You don't chase money down. You let the money come to you, right? So if you notice market trending up, right? From this little chart that I drew, from this little simple little box that I drew, we know we was trending up when price was up in these areas. It was trending, making higher highs, higher lows, right? Um, what happened? What happened right here? So if you miss this trade or you're trying to get into this, or we call this an impulse move. Man, you hit me so much. Impulse move, right? This is called an impulse move. So I like to look for these impulse moves. All right. So an impulse move happen, you pull out something called a fib. Man, you hit me with so much. Impulse, let's start with the impulse, right? Impulse move. All right, impulse moving trading refers to a strong directional price movement that occurs with significant momentum. Would you agree that the buyers was significant? You don't see not one red candle over here. Buyers was very significant. Okay, so that's an impulse move. Okay, impulse move happen. Okay, have some patience. Wait. Okay, you don't rush things. You wait on a pullback. Where's your pullback? You could pull out a fib. Where's my fib? My fib is right over here. Okay, I pull out my fib and I start. I want to start at this wick because it was a rejection. Price was pushing down, and you see that wick. The buyers came in. The buyers stepped in right down here. So I'm gonna start down there. and I'm gonna pull my fib up here, right? And when I pull my fib up there, what is a fib? A Fibonacci retracement. Let's pause the video again. Let's go look up a fib, right? We already looked up impulse. Fibonacci retracement. That's what I'm looking for. Um, fib bon, B-O-N, um, something like that, right? Something like I probably messed that, but let's figure it out. Okay. All right. So a fib, right? Fibonacci analysis and trading utilize mathematical, ratios and blah blah blah, like a lot of stuff, right? But let me try to simplify that for you. Let me find Fibonacci. So Fibonacci is a sequence that found in nature. And the reason why I like the Fibonacci retracement so much is it aligns with my soul. When I say my soul, I'm talking about God, um, big God, God. You find these numbers, you find these sequence in nature and everything. Okay, Fibonacci sequence is a series where each number is the sum of two preceding ones, starting from zero and ones and appear frequently in nature. Who create nature? I know one person, you know what I'm saying? So that's what I'm saying. I love this because it really connect with my faith, all right? So spiral patterns like in the sunflower, seashell, broccoli, and blah blah blah. Let me show you some images of what a Fibonacci, thing look like. Or you see it everywhere in nature, right? So let's look up some nature stuff where you could see it. Um, Look, that's a sunflower seed. You know what I'm saying? Oh, I said sunflower seed, the plant. Um, you could see it in the universe. Like God is a mathematician. I just want you to know that. Okay? You could find it on your earlobes. You could find it in the weather patterns. You could find it in the galaxies. You could find it in the flowers. You could find it everywhere. Okay? God is everywhere. Okay, so I don't want to preach. We trying to trade. We trying to teach you how to trade. All right. So Fibonacci retracement, right? There's some levels on my Fibonacci retracement. I want y'all to capture these levels. So these are the levels that I use. Okay, then I'm gonna explain them. All right. So take your time, write them down, jot them down. Look for these things. There's an easy way to find stuff too on TradingView. You see this magnifying glass with a lightning bolt. Quick search. Type in whatever you want. If you said fib, boom. FIB, it shows up right there. Fibonacci retracement. And if you right click this star, or not right click, but click on this star, you could highlight it as your favorites. Okay, so whatever you're looking for, you could quickly type it in and you could find it. Moving on. So you got the levels, you identify the levels, you write it down. So on price retraced to the 618, which price typically likes to retrace to the 618. So if you know anything about trading, the 618, between the 618 and the 50, they consider that the golden ratio. You're probably gonna see that somewhere. Once you do your digging, you're gonna hear golden ratio and all that stuff, and you see what I'm saying, okay? But like I'm saying, I'm just dumping the information on you. You go back and you watch this video, and you go from there. You know what I'm saying? Education to me is key. All right. So boom, you pull out a fib. You identify something. We already talked about accumulation, right? Um, I don't think I wrote it. I don't think we searched it, but I talked about it. Probably accumulating. Probably you probably spelled that wrong, but listen. Hey man, education is key, right? Um, Accumulation in trading refers to the gradual buying of an asset by an investor, often indicating potential price increase as demands builds, right? So accumulating, accumulating, okay? Accumulating, price just building. It's like a pressure cooker, you know what I'm saying? You don't trade in accumulation. Please don't trade in accumulation. Then you wait for your pullback, and then you want to know, okay, if I'm waiting on a pullback, because I know after an impulse move, I'm getting a pullback. Okay, what are my areas that price goodly pullback to? It goodly pullback to my 50% or my 618, or better yet, the indicator that I just told you shows you the imbalance, right? It shows you that 4 hour imbalance that we got on our chart right there, right? And guess what? Price reacted from that imbalance. The price took off. So I'm just saying, if you was trading, um, they have a tool called a replay bar, right? Um, right up here, these two little triangles, they call a replay bar, right? Let's start anew. Let's start anew. Okay. We're not gonna do random. We're gonna select and say we want to just say price was right here, right? We don't have nothing. We don't know none of this information. All this analysis, we don't know none of that. Okay. We don't know none of that. The only thing we know, right, is said price had a bullish impulse move to the upside, and based on the analysis and my arrow pointing up, meaning that we trending up, right? And like I said, you're waiting on, so you pull out your fib, you're trying to get your levels, you're trying to see, okay, where can I get in, okay? If this the high, because right here, price start doing some crazy stuff. So this is the high. We ain't playing with the high. That's the high, okay? And this is the low. Okay. Do you buy stuff when it's high or you sell stuff when it's high? Do you buy stuff when it's low or sell or you know what I'm saying? Like which one? Like what do you do? I know I buy stuff when its price is low. And I sell stuff. If my house worth 300 million, I said 300 million one day, right? But if my house worth 300,000, right? And I only owe the bank like 100,000 on it, I'm selling that thing. I'm selling that thing. I'm giving the bank his money. I'm walking away with a 200,000. I'll probably go buy me $100,000 house here and another $100,000 house there. And I'll probably try to rent one while I live in the other one and try to go from there. You know, that's just simple math to me. But anyways, back to the information, right? So you identify your highs, you identify your lows, and where you possibly get in. Like I said, I normally trade right in between the 50% and 618. That's the golden ratio. And then my indicator telling me, okay, you got some key areas right there. Okay. And you know, price, I'm gonna hit fast forward on this thing. Price is moving now. Let me speed it up. Speed it up, you know. And boom, price reacted from there, and so on and so on. So that's how you use that replay tool. So I'm gonna close that replay tool out. Okay. So boom, price reacted from that 618. Okay. Moving on, you know what I'm saying? Do your same analysis every week, you know what I'm saying? You just do analysis, see what's what, see what's what. Okay. Price doing the same thing that it did up here, right? It fizzle out, push down a little bit, and then it continue on higher. Um, But to the left, you know, to the left, price was not acting right, right? Price failed to take out that high over there to the left. So that's why we looking to the sales. Um, yeah, so you go from there, man. You just keep on going lower and lower and lower. I don't want this video being forever. So, but you know, just watch the video. I laid out a lot of information. When you see that, you know, knowledge is key, man. You just start looking. I would like I said, this for this week now. This is a this week analysis. I'm looking to take my sell up here if it's true. You get what I'm saying? Or you know, you might even find something better on a lower time frame. But you just keep on going down, man, till you find, you know, a suitable entry and you take your profit. Okay, so I think I want to leave y'all here. All right. Y'all just repeat what I showed y'all. Just do y'all thing and be great, man. This is Kimar from Kimar Can't Help. Malavono. All right, mo want to know about blessed day, y'all.